my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's go right into the chart, shall we? Bada bing, bada boom, here we go. So we've been oscillating up and down between these channels as we've been seeing the last 15 days or so. Quite fascinating. As we pointed out yesterday, we had this 706 rejection, possible bearish retest down to the 6.5 of this diagonal fib level, which we get into more minutia than other people who might have been seeing diagonal fibs coincidentally, like we've been seeing since January and before that, as we use as a tool, which we find quite fascinating. You can use them yourself if you use pitch fans. You could do 3 quick clicks to a direction and then a retrace, impulse retrace kind of idea. In this case, retrace impulse idea. So it will give you those levels, and you can right click this and go into the settings and copy our fib levels if you like. We have the 236 in orange, the 382 in white, 0.5 and 618, the golden pocket in gold, go figure, 0.65 and 6706 in dotted lines as the outskirts of that, the 786, the ultra outskirts. And I don't know why we have this one. I actually don't use it, so I could technically turn that off, but maybe a bullish projection into the future or higher time frame pools or something. I just basically use that. So quite fascinating. Let's go right into the liquidity. What is the liquidity heat map here? It's when people lock their liquidity into the charts to be burnt to a crisp by the market maker because they refuse to use a stop loss, and they get burnt to a crisp. So let's see who's getting crispy, shall we? So as we put out yesterday, when we were coming up to here, we decided to open a short based off of the imbalance in long liquidity that entered here in terms of bubbles. You have 34 million, 42 million in short liquidity down here, 78 and 76 million. And those guys opened up here at 28k, and then they started to come back into them, eat one of the bubbles here, bounced up, started eating some of this liquidity up here, and now we're back down into the 100xers down here. This guy interests me right now at 2771, 100x long at $79.11 million. And of course you have these guys, lest we forget, who was 193.9, kick ourselves about it. So we just chilling, waiting for that liquidity grab to this pool down here at 27.58. I would love to see it get hit and taken, and then we can consider possibly switching sides. We'll see as divergence forms or not. So that is one interesting thing to note. As we move forward in time on this 1 minute time frame on the liquidation levels here, we start to lose the previous minutes. So we'll lose this guy by tomorrow and we won't know where he was. But you can always see based off the length of this pole to the right. I like to use the term noodles because it's straight like a noodle here. So the length of this noodle is longer than the lengths of these noodles up here. And you see more spacing between the noodles, which I termed as broth. So the broth above is more than the broth immediately below. So despite this saying there's a negative $3.43 billion imbalance to shorts to suggest going up right here, I would suggest that it goes down to clear this first before going up, based off of where we are currently on this black line of price action. Let's just reload this to be sure. We're back in over $100, which is nice to see. I want to get that 250 for the weekend, and then I would have slept with the trade open and gotten that gains without really doing much. I did hide the eggs for Easter Sunday. It was nice to see my kids finding some eggs around the house. We could do it in Japan too. It doesn't need to be an American holiday necessarily. How y'all doing out there? Booyah! Nice, everyone's doing good. That's great. To here. So we're going back to the this refreshed. So they're going back into these 100x, these orange guys that are right around here, coming to get these 100x pools below. It looks like they spiked down, grabbed a few $1 million here, then bounced off their liquidity, and then there's more that they're coming possibly back to, particularly the 79 million at 27.71 would be nice to see gobbled up. That would be nice.
Fatality.
Yeah, got it. If you're up, and at least you protect your entry. I put my stop loss into profit. I did put my stop loss into profit, and for whatever reason, because it was a limit order, it didn't knock me out, so I just stayed in for this. But I did set my take profit on this too, so hopefully it'll fill that properly when it hits my, if and when it hits my take profit. All right, so I think we can go to the higher time frames now with the liquidation heat map. So let's do that, shall we? We're gonna try to make it quick today, and then short and sweet, and then you can go enjoy your weekend. Let's just be in and be out like the wind. Whew. All right, so the 7-day time frame is pretty much, it looks like it's thick. If you got 5 billion here, 5 billion there. So it looks like there's this rock in a hard place it's caught between, but if I do look at the overall gist of the heat, it looks like it's getting hotter up here at the 29K region. So you'd expect, although this is getting hot too, it's attracted liquidity pools to both sides to suggest a move coming. So do you go down, clear the longs first, and then shoot up to 29K off their liquidity? I don't know. Let's go to the higher time frame to juxtapose so we can suppose where it's going. All right, so on the monthly time frame shows a little bit of a pool down here to be taken at 27.6 of 6.7 billion and 8.4 billion at 27.5. That's what I'd like to see personally. You got 2 billion at 27.4, so this is like a good $14 billion they could come into, and that's showing up as a heat signature as well. You can see that color coming in, and just above, let's do both sides of the equation, shall we? So just above that you have 5, 10, 14 billion. So just right here you have slightly higher down to 27.4, 5, 13, 19, 20, 21. So you have 21 billion down here versus the 15 above. So this suggests going to clear down to 27.4 at the least. And then beneath that, 27.4. Okay. Sorry, let me do this properly. All right, so you have 27.4. Then you got a little sparse pool at 27.32, and then you got more 11 billion at 27.1, 10 billion at 27 even, 11 billion at 27 or 26.9. So there are pools suggesting the heat go lower right now, and you got a bunch of 20 billion pools down at 25K. So I'm starting to see why people are calling for 25K now with the heat signatures being there. However, as above, so below, you got to see how things look above as well. So you got 15, 12, 10, 5, 10, 15, 20, 18, 14, 10, 8, 10, 10. So in the vicinity up to 30K, you do have almost double digits on all of those pools above. So just within this region alone, it looks pretty even, except for in the immediate to the downside here at 27.4. So going to get that 20 billion perhaps down here on the external pools of the 1 month time frame. Down below also at 22.5 and below, you got larger pools starting to arise here. That could suggest a narrative shift at some point. Interesting to note. Moving on to the 3 month time frame. Happy Easter, yeah, for sure. It's just a holiday. It's more or less to celebrate spring, but if you're religious, more power to you. They like to co-opt a lot of the older seasonal traditions like fun fact about Christmas, you have, the solstice, right? So you had the 21st of December, which is the shortest day of the year. So from the perceptions of the people of old, they thought the sun was dying. So for 3 days it held in the sky with that short day intact, 22, 23, 24. On the 25th day, the daylight was slightly longer than before, so they thought it was the sun's birthday. So hence the star at the top of the Christmas tree. It was kind of a pagan thing that was co-opted by Christians, which is called Christmas. But it's been something for thousands of years before that. So I'm kind of particular about getting your history right on these things. It used to be Saturnalia, and we worshipped Saturn, and that's why we have wedding rings being the rings of Saturn and stuff like that. It's a fascinating thing, humans' history and their amnesia about it, and rewriting and co-opting of that history. So up to 29.4, you have 45 billion and 46 billion. This comes together to $80 billion up here at 29.4. So this is where the narrative of the external liquidity shifts to a higher price tag. So if they go down and get that pool to knock out having to pay them and then go up to the longs, now you see why I'm kind of thinking about shifting to a long at some point. So I have to get particular because it could go down even further. I'm not necessarily guaranteed to have that bounce exactly where I say. So nothing I say or do should be taken as financial advice, of course. But it does suggest that the 29.4 does get hit at some stage because it's getting mighty thick in the billions here. So if we go back to March 29th, it was 30 billion. Now it's 46, so 15 billion has been induced into the charts over the last week or so of this sideways price action. And down below, the happy campers beneath 19K are building as well. So that narrative shift to this pool, starting to eat into these pools, could occur at some stage. Going into the 6 month. Yeah, they used to say Dies Natalis Solis Invicti. It means birthday of the unconquered sun in Latin. Dies Natalis Solis Invicti. The day of the birthday of the unconquered sun. And they always thought the sun would be, they would fear that it would lose that year. So, here is 29.47, 80 billion, as we said. It starts to conglomerate it into one pool there on the 6 month time frame, I believe, yes. So you got 13, 7, 30 billion, 80 billion above, and just small little baby pools to 33 billion below. So 27K might be a place where divergence spawns, because you do have a little bit of a sparse area to, let's say, here. So 27K might be a nice point to look. We'll go into some fib work as well about that. And yes, let's go to the yearly. We're seeing some bounce-a-roo a little bit. Always getting these wicks down to the lows. And the yearly time frame. The thing that we've been noting about the yearly time frame, which is fascinating, is up to 34.8. We have that 84 billion up there, and we've been seeing pools of the double digits above 50 starting to form from 32.4 up to 34K. So this entire region of $2,000 of price action is starting to get nicely filled with about $200 billion of liquidity, and also up above 30K. So the narrative to keep going to the upside up to 34.8 is not necessarily out of the question. And this 34.8 pool has been open since June of 2022. So, you know, you hear people talking about is gapping up to 34.8. Well, it's not necessarily gapping up, it's the consolidation enticing people to the table to produce that liquidity to allow us to lubricate ourselves up to that region if we do go to 34.8. But me even thinking about that and saying that is just so crazy for me, because we remember doing this back here and talking about 25.2 conservatively, and so now we're up to 29.2, 29.4 conservatively, and we've been slowly eating up these pools. So the interesting thing to note is down here at 19.5, we did talk about those happy campers down below here, but yeah, they are happy campers for a reason, because it gapped up without giving people time to enter. So it ate these pools at these 200 billion at 25.6 without giving anyone time to enter here. So we do have people entered, of course, but in a relative scheme of things, if you look at how these pools at 22K, the $68 billion here, versus 32K, 32.8K, and the 76 billion. There's more above in this pool than there is down at this pool. There is a $98 billion at 22.4, but you could juxtapose these and try to see which side is. I'm not going to add them up today, but the beauty of high block is you could get granular with it and add up all these pools and see which one wants to win the tug of war. Okay, so I play at one pool absorption at a time, so getting to a certain region, we said 25.2 was our target to hit. When we hit that, and then we started to come back into this liquidity. So is 29.4 the target before we start to come back in and bounce off some of this liquidity? I don't know, but at every point you should come back to retrace a little bit to test your lows. So we're looking for that to occur on a higher time frame after we clear some of this juiciness above. But first, before they go up, they should take out a little bit of the particularly 100xers and 50xers who have entered during this consolidation. They don't want to pay those guys, to say the least. So imagine this is everyone's loading into the craft, and then they kick out the people who have been trying to cut the queue, and then they go up or down. So if it goes up, it will go up to go down. If it goes up, it'll go down to go up. So they always have spawned that stop hunt before. So if you're the patient person, you would not be in the trade right now, personally. But we decided to just try to read the price action in a hyper way where we can catch that stop hunt and catch the bounce. But I wouldn't do that if you were necessarily new or not know what you're doing. So looks like we got it good to go. So this matches up with that pool at 27.5 down here at the 0.65. If we came down to it, it would be like about here. We got 8 hours for that candle to become real. 27.455. If we come down there and close it and then bounce off or even wick off it, would be nice for me anyway. But let's go to another chart with some regular fibs intact. Alright, so we were previously looking at, this is the 618 of this, let me see. So this 618 fib from this impulse to the upside is giving you that bounce once, twice, 3, 4, 5. To me, it seems like that 618 has seen its day. So going down into these pockets, this is an inducement model, so they're inducing people into the charts to grab lower. So the 618 bounce, people trying to hop on board too soon, you would wait to see it come down into these regions or come up to the 618 and reject and come down further. So this is like a scalping region, not a long-term region in my mind. So I would wait for these pools to become more apparent as they go up or down to do that stop hunt to these guys who have entered over the weekend and since Thursday when we've been down pools of liquidity. So, and this bearish projection, once again the 236 has been maintained. If we are below this 28,300 price point, then we can go down into these pools, potentially down into here at 26k. And if we can maintain 28,084, which we rejected at yesterday, or today rather, that's why I didn't close my short. I was like, we didn't even clear this yet, so why do I need to fear it? And so I just left my short open since yesterday. And yeah, until we can get above this 28,084 range, then the bullish projection to this region at 29.4 and above just doesn't really have a reality yet. So that's trapping the price in both forms. I don't really see a way to change that at this time. I'm just going to keep that there as is until it starts to break these regions. You got the 6.8 bounce that's been happening here. We haven't been getting up to this bounce just yet. So giving the impression of weakness right now, but the weakness could be short-lived after they come down to a region here and then bounce out of there to here. False move Monday, and the weekly candle close just around the corner with this candle of the 12-hour. Everything closes on the daily close, so the daily close is a really good place to put yourself in the charts to see where these time frames close and how they give back on the stochastics and all that stuff. So it's nice to see because you won't be able to see that reset until the timer resets itself. So for example, on the 12-hour here, you see this curvature on the stochastic RSI and the value being stuck at 10. Now that value will only, the degree of this opening crossover of these values can change within this candle, but the value will change when the candle closes, and then it will immediately jump to 0, for example. So you can see how much of that data is effects based off of the candle close. That's what I mean by observing as the candle closes. So we can see this on the hourly time frame. So let's do this on the hourly. So currently the hourly of BTC is at 10. So in the next 37 minutes before we close out this live, you'll see, does that 10 go to 0 based off of the previous candles? It looks back 14 candles for its information on that, so you can see how, okay, 1 2 3 4 5 6 7 8 9 10 11 12 13 14. So this amount of data affects this candle in that way, and so you're inputting all of this information into your brain based on how this candle appears as to what it does to this stochastic. So watching it over hours and hours and hours and hours of doing that, you can kind of predict how much it will give back or not. So based off so I think we're out of the fibs now, so let's just throw on our heads up display of Momentum Master. We're not going to do the intro today. We're going to try to value your time a little bit more. So boom, just throw on the HUD and link in the description, momentummaster.info for more. And yeah, basically we're seeing this shift in the cloud to the downside here, so we could see this continue to play out further into the regions we talked about on the hourly time frame, with that last bit of baselines above price, seeing some volume disparity leave the charts here. Previous interest spiked up into this, but met with that fair value gap rejection here. We're going down a little bit more by the looks of this cloud on the hourly. Let's go into the 4-hour and the thing that got us to open the short. So we opened the short back here on Saturday while I was working, and we just stayed in. It came back slightly to the entry, but never even went negative after we opened it really, and then it's just been going down since then. So we've been in this thing since back there. Here's the proof in the pudding. Went to sleep with it open because no reason not to close. And yeah, this cloud is thinning, but the interesting point is as we go down, this is kind of curving and thinning up. So it's kind of doing this weird thinning while it's above the price. Fascinating really. And if we go to the 6-hour, we are also beneath that cloud. So that was one other thing keeping me convicted to the idea of it going down. So this is why if you have Momentum Master and you go to the features page here and you scroll down to the baselines and the trend cloud, you can see why this volume weighted cloud formula, which expands and thins according to the amount of volume present in the asset, will give you an insight as to where it's going. Even if it's going up at the time, you don't really need to feel fear about entering a short on the thickness of this cloud, and that's why we did it. So yeah, that's one of the cool fascinating things about this. I used to know a guy who was really into Ichimoku, which in Japanese means one cloud, and that's an entire strategy unto itself. And that got me down the path of looking into Ichimoku and all of their Tenkensens and all this weird things they use as criteria for entry. But it was a little bit too complicated for me, but I did like their cloud formula. So I did end up finding my own sauce for that with Momentum Master, and that's why the whole Pierce the Cloud, come back, kiss it, continue idea came from. So it's not from Ichimoku, but it was inspired by Ichimoku and a guy I knew that absolutely killed it with Ichimoku strategy. So all of the components here did come from some inspiration and research and back testing, not just random things that we added to look cool. So pretty fascinating, this cloud formula on the 6 hour. And one thing that I've been pointing out to the group of the Momentum Master and posted images in Rainier's group is this thinning cloud on the 12. So this 12-hour cloud is getting mighty thin. Started to thicken up a little bit over the last 24 hours, which is one saving grace about it, but we are beneath it currently. So a spike down into this region. We did see that before here. We had a massive spike down below, and that was when we were looking at the 8-hour cloud. So let's go back to that 8-hour cloud. We were seeing the similar thing with the 8-hour cloud here. We put that out saying this looks ominous of something, and then we pierced down and liquidity grabbed everyone and came back out, and we held the cloud strong, and we said the V-shaped could be real here, and the V-shaped was real last Monday on False Move Monday. So the weirdness of this cloud going up despite us being beneath it is the fascinating point to see here. Kind of unique that it's going up, yet we're going down here. So it's a struggle by the looks of it, based off the price action remaining here, yet volumes entering the charts. It's kind of like a disparity of sorts. So what's this 12-hour telling us right now? Let's go to the 22-hour. I think the 22-hour has its own little thing going on with the cloud. So it has a similar thing going as the 12, where it abruptly made a turn for the sideways action from this drop here, and that put a damper in its plans to stay at this strength. So if we close a candle beneath this, then we could expect these regions at 26.801. The 22-hour time frame, I back tested this one, and also an interesting discovery of yours truly is that it closes 2 hours before the daily time frame. So one of these candles closes 2 hours before, one closes at the daily close. 2 hours before, daily close. 2 hours before, daily close. 2 hours before, daily close. And so you have these broken candles that are broken into 22 hours and 2 hours, and 22 hours and 2 hours, and 22 hours and 2 hours. So that broken time frame data resets stochastics in a nice manner and gives you a little bit more insight. The best way I can describe it is it's like tuning into a radio channel between the actual channel and another one, and you're getting garbled static noise that's not meant to be there, but it's a coherent sound of like what's going on in the background in the office of the market maker. Like, okay guys, we're gonna reprice it at this time. Yeah, okay, sounds good. And they're like, they don't want you to hear that signal, but you're somehow able to capture a signal from the noise using that broken time frame. It gets into laminar flow and turbulent flow, and I could get into the scientific concepts about flow and everything like that. I did talk about that when I first discovered it, if you remember, when I posted it back in May of 2022. So it is a cool kind of thing. If we, break this cloud, I mean, it's looking like the 8-hour was back when we burst down here. So I'd like to see a burst down, which is why I'm short personally. And then I could start thinking about levels down here. So let's see what the 4-hour is like. How y'all doing here? Let's see. Yo, shout out to everyone here. 3 wise men were stars. Yeah. So it's all about the seasons and the equinox and the solstice and all that stuff. I was having a discussion with somebody where I was talking about the why don't we have 13 months? We have 13 moons, full moons a year, so why is the number 13 considered unlucky and everything? The whole Gregorian calendar and the Knights Templar that made the number 13 unlucky was so strange, because 13 is actually a Fibonacci number, and it's a very natural number. So Fibonacci is you take the number before and add it to the current number to get the next number. So before 0 you have nothing, so you get the number 1, and then 1 plus 0 you get 1 repeating. You add those together, you get 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3 is 8. 8 plus 5 is 13. 13 plus 8 is 21, and so on and so forth. So you also have these joints in the body. Why do we have 5 fingers and not 6 or 7? And look, we have 13 joints in the body. You have 1, your wrist; 2, your elbow; 3, your shoulder; 4, your head, your other shoulder; 5, 6, 7, pelvis; 8, 9, 10, 11, 12, 13 with your knee and ankle intact. So you got 13 major joints in the body. Everything follows this number, including the full moon. So why are we living at odds with that natural flow? We should have 13 months in a year. Why don't we? That's the question. Things that make you go, right? So crystals are so amazing. Yes, crystals are amazing. We live in a world of crystals. You're watching me on a crystal display. You're powered by crystals in your chips. Everything is crystals upon crystals. The piezoelectric effect of quartz is amazing. And it's the most abundant crystal on Earth. And that's why China wants to take Taiwan. They want their crystals. And they call it the Silicon Shield, protecting Taiwan, because they would have to destroy the factories to get Taiwan, and they would destroy their hopes of having the crystals. So that's the only thing keeping them from doing anything right now. But let's leave politics at the door, shall we? So yeah, I think that's about it. I mean, the pools, until this guy disappears in another hour or two, just remember, this guy's he's the last of his friends, the last of the Mohicans at 2758. This 25x bubble, the length of his bar very nearby, his noodles very close with very little broth. I want to see it get slurped up. He's underwater, hoping for a miracle, not closing, so that guy should get attacked. It also coincides with that 786 of this fib level on this impulse to the upside here of the V-shaped on the 4 hour. So it would be nice, a nice little inducement model of, they induced a lot of liquidity, long liquidity in, and they said psych, and then they go down to a real level and then bounce off that. Now you still need to mind your divergences and everything, because I've been in times where I wasn't looking at proper levels too. So we should look at, let's expand our vision scope a little bit, so we can look at where that could go awry on another impulse, so we can extend to an larger external range impulse and see the 618 that we bounced off once, twice only. So this model could bring us to 27.523. So that would be slightly lower than that. I'm fine with experiencing a little bit as we go down here. This weighted moving average also coincides with the 618 of this external range, so that's an interesting point to think about here at 27.524 on that weighted moving average. But you could even come down into all of these regions within this fib as well. Let me see what we're getting too many of these fibs going at different times. yeah. I'll just leave that dotted line there as that 618 for that potential bounce if it goes below that point. So that would be interesting to note. And it's interesting how the weighted moving averages and the adaptives start to become these adaptive points, which also coincide with the Fibonacci. So even if you're not adept with Fibonacci and you have Momentum Master, a lot of these weighted moving averages or adaptive moving averages got you covered anyway. And same with the ATR. We have an ATR thing which shows this line here, and check it out, the line is right in that box that we were looking at. So a lot of these things save you the hassle of having to know about Fibonacci at all. If we maintain that line, then we are still bullish. If we break it, it'll start to put in a bearish trend idea. Alright, so hourly closes in about 22 minutes. How much stochastic does it give back from this 10? Will it bring the Williams down as well? That's what you want to see on each candle close. And going to the 5 minute, I think that's about it. I mean, you still got a thick cloud here you're getting rejected on. You got the cross up event, but which time frame do you need to flip? Looks like the 15 is crossing down on you, so you're fighting against that right now, which is not wise to do, but it's got to start somewhere on the 5 minute, right? The 15 minute is still coming down. You did get previously bullish divergence on the RSI and the money flow here on this candle attempt on the 618, but we're still in our short, just chilling like a villain. What do you guys got for me? Tell me something cool, something nice, fresh. On my end, the screen is frozen. Anyone seeing this? Audio still streaming? I keep having it jump in and out too when, man, my silly internet connection. No!
Why do you curse me, internet gods? Why, oh why? No! No!
I need to get some sort of upgrade at some point. I don't know how that would occur in a mansion complex, like with 14 floors and people own the apartment. It's not really apartments, you own them. So, but the entire building itself, they don't upgrade the internet there. So it would, if you upgrade it, it would be for the whole building. So how do you get that just for your unit? I don't know. I'd have to research some more, but I ended up having to get this wireless one, but it's faster than the internet one, the wired one for the building, but still slow. But yeah, you're getting this rejection off the 15. I wouldn't be surprised if you come down to here, just to be honest about it. But these diamonds and everything end up playing out too, so I've been ignoring them recently, but I shouldn't be. A lot of the times these things do play out, but they definitely give you those fatigue points and things to your phone, which is nice. So this gives you the dynamic alert system here on Momentum Master Ultimate, so you can set and forget a one-time ever-changing text message which tells you the overbought status of all the time frames. So it doesn't mean enter there necessarily, but if you're seeing 5 time frames consistently oversold, eventually it will give you that bounce to the upside with other confluence intact. So we're seeing that 3 time frames oversold here. The hourly is oversold. So are we going to see a pierce up here despite me wanting it to go lower? 19 minutes on the hourly. money flow is coming beneath the RSI, which suggests that it starts to come up at some stage. You did previously get a money flow divergence, which ironically spawned on that dip there. So we're seeing that sideways of that divergence of the money flow as it dipped lower. ADA, please, if time. Sure, we can look at ADA. I saw somebody talking about ADA somewhere else, so it seems to be on the zeitgeist at the moment. Let's see what ADA's doing. ADA. Let's first start on the daily. So the daily time frame still has some juice by the looks of this screener down here, bottom left. You still have some stuff left in the stochastic RSI. All of the RSIs are chilling around 50, which is decent, even though the stochastic RSI on the 3-day and the weekly and the 4-hour is not in your favor. So just off that immediate scan on the bottom left, I can kind of see where the higher time frames and the medium time frames are. Previously, since December, we've seen this run up and this run down. This looks like it was a perfect like 618 bounce. Yeah, of that impulse up, boom, bounced off the 618 of that, and now you're starting to see another impulse form here. We bounced off that, bounce, continue, and this looks like it has a bullish trend-based fib idea inside it, so you could kind of go up to here and down to here, and the 236 level puts you kind of at this fair value gap on the daily time frame. So we're starting to capture it a little bit. We go to the 12-hour. Got that cloud thick, and we've bounced off it nicely twice. Interesting. 12 hours starting to wane a little bit here, off strangely interacting with the leading MACD formula. Williams starting to look like a duck-billed platypus with its alarm and beak open, kind of dumping a little bit out to potentially suppress the 12-hour down into these pools. This would be an inducement model as well. You have this sideways stuff, they come down, take out all of this, all the stops get hit for these guys, then they go up to here, similar to Bitcoin where it would go down to here and then go up to there at some point. Rarely would you just see it just spike up like, yeah, I'm gonna just take everyone to the upside. So this would also be a head and shoulder formation, and then that probably coincides with, you know, that coming down to their region. But yeah, if it fails that cloud on the 12-hour, that's what you would see. Let's go to a lower time frame. 6-hour getting overbought without really having gone anywhere. So you had previously seen the 6-hour oversold here on Friday, and due to the low liquidity of the weekend and Easter, we had seen only about 3% on that 6-hour thing, and the 6-hour cloud does look like it's thinning, about to get rejected here and dump down, in context with what we were talking about here, where you would come down to go up. So the 6-hour closing beneath, bearish retest twice. Are you going to come down out of this from there? And then you could just say this is kind of like a head and shoulders. I mean, this shoulder shouldn't be higher than the head, technically speaking. But you could have shoulder, head, and then this drops down to create something that makes another shoulder at some point, or negates that. But this could be the head of that shoulder, head, some other shoulder here, just on resetting of that 6-hour. if this struggle, because you had basically sideways price action, right? But you had this going up. So this suggests a struggle on that 6-hour time frame, which needs to reset. And the cloud also being above the price action does suggest, and thinning suggests that it could continue down. This gives you the leading thing of that, because the last time you had thinning, how often does that thinning immediately shift up? It doesn't. It normally gives you the leading idea of it continuing further towards that direction it's thinning to. So it's suggesting a drop here on the 6-hour time frame. If we go to the 4-hour, let's see if that idea remains true or not for ADA. So you are getting that thinning cloud. We've closed beneath it in a similar fashion, and it's starting to turn purple, even though it's double topped on that. So it's starting to suggest sell-off in some manner. You did have a previous cross up, and then you rode that up perhaps, and it's maintained the baselines thus far. So as it starts to drop, if it starts to drop, then it would close beneath the baselines, and as you lose these baselines, then the idea of the narrative shift down to these regions makes more sense. So this also coincides with that fair value gap on the daily does turn to less of a gap the more of the time frames you collapse down into, so you can save yourself the guesswork on that as you start to kind of get narrow, you get more granular with each of the time frames, and you see, well, how much of that 4-hour time frame is actually a fair value gap on lower time frames, and it doesn't look like it remains a fair value gap at all. You did previously have one here which got recovered already. So do you even have a fair value gap? Looks like the only gaps I see are right here on the hourly time frame. So if I go to like a 15-minute, you could see what that is. And this is how you get the fair value gaps. Like, there are tools out there that are free, but you go see how it holds up in court of the lower time frame. So this candle here repriced higher, and they came back to a point to test it, but they did not go back to this candle region at all. And this previous wick is also included in that calculation of why I only go to here, for example. So this wick, so this region here is a fair value gap on ADA that could be a point of interest to the market maker, the repricing algorithm, whatever you want to call it. There are entities at play that want to move back to certain regions at certain times, so they could come back to that point at some stage. You did get a, let's go back to the 1-hour time frame. Or we didn't look carefully at the 4 hours, what's it called, the 4-hour B settings yet, so let's do that. So you're starting to get double topped here. The money flow is coming above the RSI here, which suggests that it comes back at some point. Previously you do that when you come above the RSI, you start to come back into it. Rather than gravitate the RSI to you, it starts to come back to the RSI. So that could happen here. You're not seeing so much notable volume on the 4-hour time frame. You previously had a red vector sell-off at that point here. So somebody significant offloaded a position here, which started to shift that narrative of the cloud to purple. So are you going to see that continue due to that shift in narrative of that player right there? Let's go to the hourly. Still seeing some ambiguousness of this sideways action. Williams getting in the red though, suggesting that it could possibly come down and cool. The average of the Williams still has room to go up more perhaps. The times that it doesn't do that is when it aggressively dumps though. So you need to be mindful of when the Williams average is lower than the overbought status of the actual Williams. The impulse is short-lived and then it comes right back to it. So having that gradual average up gives you that more potential sustainable idea, whereas this one went up and just immediately came down because this was a larger gap between that. So could you see that dumperoo for ADA out of the cloud? The cloud is holding for now, but it's starting to look a little bit thin on this hourly too. So that 4-hour, 12-hour rejection suppression idea, and yeah, the hourly not really taking you so far. So this is where you see the juxtapositions of the clouds and their overbought, oversold status, and then that gives you the idea of, well, this could continue lower, and that might be why we're getting that resistance on the hourly time frame playing out here. Go to the 15 and juxtapose that to close with an idea. So the cloud doesn't really give you anything other than when you enter where you could see this continue idea. So if you had entered down here, you would be seeing the cloud potentially holding, although the baseline is crossing down on you. So, and the baselines are not in your favor here. You're kind of seeing this suppression possibility unless you can get above and reclaim these baselines right here. Then it could just start to suppress the price down beneath the cloud and everything. The 15-minute has reset though, and you've gone sideways, so on a smaller time frame, but you have the Williams not on your side. It could cross down and alarmingly open to the downside here. Not in a it's not in a single-minded state here on this time frame. You have this in your favor for a bullish continuation idea. However, the Williams not on your side, and the idea of the baselines not on your side. So you have the baselines and the Williams against you, and you have the stochastic and the cloud for you. So you have two things for and two things against you here on this time frame, making it ambiguous. But based off the 4-hour cloud idea, it would take a lot to get above. It looks like you could be getting some double top vibes here, and the 5-minute is suggesting more. So the 5-minute dump, 5 minutes getting overbought here, so you're getting this dump and rejection off the cloud as you broke down out of it and you're bearishly retesting it down. You could say this is a shoulder head and a shoulder out of here, but based off of this cloud idea, I would say it comes down to reset this 5-minute at some stage soon. So the 5-minute on ADA should come down some more. And you got shoulder, head, and shoulder that's trying to appear in the charts here. But the 4-hour time frame, that's where we stand back a little bit further back in the appearance of what it's doing and say, what's this about? What's this little bit of happiness we're getting wicked off of here? Is this going to open it to the downside some more? On ADA, down to a fair value gap region. We'll just keep an eyeball on it for you at ADA. And so, yeah, and then you have that other point of interest at the 618 down here. So a true retrace idea to see something going forward would be something like that. If we just do in the local impulse zone here, that does kind of coincide with a 786 idea of this pocket of this one impulse on the 4-hour. So you could see that occur. But yeah, I don't buy into these bull flag ideas at all. I see them as traps. So If it comes down out of the trap into the 618 or any of these regions below, that would be a cool idea for a long, which could continue up to these regions at some stage. So while people are drawing things like this on their charts and saying, I like what I'm seeing for ADA, I'm not liking what I'm seeing for ADA, because this is generally retail traps. Pattern trading is generally for retail, and I'm not trying to be a retail trader, so I'm trying to be a little bit more smart with my money. So that would mean going to a discount within this range down here. So that's what I'm seeing for ADA. Bada bing, bada boom. Let's see what else is going on. Thank you, Wendy, for showing up and just being as cool as you are. Take Elon's internet. You'll need to put a dish somewhere. That's cool. Yeah, Starlink. I don't know how fast it is, though. I know some people use it. I know Jason Casper uses it, and his internet cuts out all the time. Yeah, no problem. Let's go back to BTC and then close out the hourly candle as we were talking about and see how much stochastic that gave back. Still just chilling around that level, just no real conviction on the weekend just yet. But expect some shenanigans over the daily close, like a drop down before they push up to close out strong to create a wick and a buyback or something. I mean, there's always some shenanigans that occur. So the same thing applies here. You have this cloud shifting, suggests it's not going to immediately change blue. It does shift and change a little bit here, but ultimately you expect to see some rejections off these clouds, and we did with this one. Is it installing a double bottom idea? I mean, you've seen enough hits to the 618 for it to fail, in my opinion. Like, what is with the whole like 618 range trading thing happening here? So once again, we got 2 more minutes for this to close. We got the 13 value. We're going to see how this closes out, and this is what I look at when I see how many minutes we have to 1 minute and 30 seconds for that candle to close. I go and see what the stochastic and the Williams and all this stuff looks like, and when it closes, it updates all the data and moves that somewhere, and then you can take that disparity. Okay, it was at 13, now it's going to move to 0. Okay, so it gave 13 points back. Interesting. So it gives you that information, which you can only get in the moment. You can't get it on replay mode. So it's one invaluable tool of looking at live price action. So you're seeing more bubbles start to open up here. Slowly, more shorts starting to open as we dropped. These little guys, these noodles starting to appear. I'd like to see them come to this at least 27.7 100x guy. That would be nice to see. And then they're just a hop, skip, and a jump from these guys that are about to disappear at 27.58. Can they do it before the weekly candle close is the question. So let's just see how this closes out and resets the stochastic and give you a little bit of insight as to how the information updates. Once again, it's default to 14 candles back, so all of these 14 candles and the current one come together to coalesce into a curvature of the stochastic. So interesting, it didn't change the value at all. It remained and started to curve here. So that curvature gives you that idea, which sets algorithms into motion. Into what exactly? You got the money flow beneath the price. Is it going to start to play out the hourly time frame here with an upside play from this moment? I don't know, but that's kind of what you see when you see the candle close. You see these lines change only in that moment. So I'm seeing more bubbles start to open here now, so they could retrace into these noodles above. They have no reason not to in terms of going sideways. It seems to be just sideways weekend price action for low liquidity weekends, so they could come back into these 16 million. Going too high though, would pay some of the shorts they're attempting to target here, but they already took out some of these 23 million pools and these small guys down here, these small fries. So did these longs get offset by these bubbles that opened up here at 61 million each? That is the question. Is the hourly time frame going to attempt to play out here to take them out? You're seeing that curvature that started to appear as we saw this close. So if you're trying to play a hourly time frame, you could see an hourly play here, but the 5 minute should chill out here for a little bit. You're getting the double bottom vibes here. This is needing to curve and thin a little bit, but we reclaimed it. Thinning cloud here on the 15 as well, unless we did get that cross up event that closed intact. So the 15 minute and that bullish divergence on the RSI and the money flow could suggest that the hourly play out here. You have the previous, you have some other fair value gaps up here that it could reclaim. Shout out to Rainier, who is putting out these drop ideas this morning. I think it was, or no, was it the rise idea? He put out one of the ideas that played out perfectly, so guys should be watching his channel too. So it's for me at this exact point in time, it's very ambiguous. I would wait for a liquidity grab down here, or if it's going to rise first before it drops, then you could look at some sort of rejection up here at these zones. We don't have significant pools of liquidity just yet. I would wait till Monday, but we're about to lose this guy down here in terms of history. Look back at 27,559. I'd like to see this noodle get slurped up here with this thickness and start to build some more narrative for a reversal to the upside by grabbing these guys personally. So we've been saying it consistently, they're underwater and they're targeted, so obviously by being underwater, so finish the job they set out to do and get it over with, in my opinion. So, and that's about it. I thank you for your time, and let's just call it a day. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and I will catch you on the flip side, ladies and gentlemen. I thank you for your time, and peace.